Welcome back and welcome to Talk of the Nation. Tonight, we return to the biting question of fuel prices. A fortnight ago, the President and Parliament ruled against reducing taxes on fuel as a measure of reducing prices and stimulating demand for other products. However, the crisis continues to build with more inflationary pressures in the economy. Tonight, we ask how the manufacturing sector is dealing with the crisis, and to help us appreciate this problem, we do have the Executive Director of the Uganda Manufacturing Association, that is Daniel BIRUNGI. Welcome to Talk of the Nation.
Thank you very much.
First things first, how is the issue of the high fuel prices affecting or impacting the manufacturing sector?
It is having quite a significant impact on manufacturing, especially since most of all our products really get to market through the usual routes, transportation by vehicle, transportation by trucks. These are diesel-powered trucks largely, and as a result of that, the impact is that our cost of production is quickly running ahead of our ability to catch up with it. But in addition to that, when you go to the fact that some of our inputs are imported, there's a significant impact that is even beyond the country in terms of the global fuel prices. The price of logistics has gone up as a result of this fuel challenge, and we're even more worried as we get closer to the Kenyan election, because we are unsure about what kind of impact that will have on an already depressed environment.
So then how are you handling this as the Manufacturing Association or as manufacturers?
A lot of our members had opted to manage this by perhaps seeking new facilities from their creditors, which was a key push to kind of mitigate the impact in the short term. But of course, now that there's a signal from the central bank that this is also at risk because of the rise in interest rates, it creates all sorts of challenges. And several of those we've spoken to are speaking about layoffs as a potential way out. Several of them are speaking to maybe closures, because you have to realize that we are in a situation where we have not yet recovered from the COVID-19 pandemic as far as business is concerned. Demand still remains low in the market, and with those situations, if you add on high interest rates, it then becomes a quick race to the bottom in terms of what you can do.
Yes, you've talked about the recovery from the COVID-19 pandemic. I would like to, from your perspective, what do you think is the actual cause of this problem? Because we've seen people attaching this to, you know, the pandemic as well as the war from Ukraine. In your view, what do you think is the actual cause of this whole inflation?
I think it's a mix of so many issues. One, of course, is the pandemic. Recovery is hardly beginning to happen, and as it's hardly beginning to happen, we then get the left blow from the Ukraine-Russia crisis that affects the ability to access fuel, given that Ukraine and Russia contribute nearly 40 to 50% of the world's fuel. Then you go to the fact that in China there is still pandemic-related disruptions, like the zero COVID policy and the impact it has had on ports and access to raw materials and inputs. Then you come down local and you find that tax administrative measures that have been introduced, such as tax stamps, such as IFRIS, are affecting the ability of businesses to kind of move forward as well. So it's a perfect storm of so many elements that have come together to create an environment that then leads to inflation. Unlike the central bank, our belief is not that is that this inflation is not inflation caused by a lot of money in circulation and very little products to go after. Rather, it's inflation that is highly imported. A lot of it is imported inflation. It's factors beyond our control. And that's why we worry about the decision to raise interest rates, because it then diagnoses the problem wrongly, we believe, and presents the wrong medicine for the problem.
You know, the President and the Finance Minister put it in a way that this problem could go away by, you know, itself. Do you think so as well?
If we've learned anything from time, it's that yes, problems eventually You can ignore it for a while and perhaps it will go away. The challenge is, what do you remain with after it's gone? Because we all remember the COVID period and the number of layoffs that happened during that period. Our worry as a Manufacturers Association is we're seeing signals of a return to these levels of layoffs. When we interrogate the figures of importation of inputs by our members, we are seeing significant challenges and we're seeing significant droppage in those. When we see the products going out to market, we're seeing drops in those, which essentially means that the ability to produce is constrained. The ability to sell is also constrained because the incomes are low and people are not able to buy these products. Now, with that mix of issues, the next scenario then becomes, okay, as a business, what does it take for me to survive? And for many, of course, the first area of focus is, okay, these are my costs. Where can I cut costs? Should I reduce my inputs? Of course, that affects my ability to sell and to provide products on the market. The easy target is then to say, okay, perhaps I need to downsize in the interim as we wait for the situation to get better. And that's not a good place to be.
And remember also, these businesses at the end of the day have to take away something home.
Yes, they do. But I can tell you that a lot of them are barely breaking even as we speak. And when you compound that with the tax rates that are available in the market and the high cost of credit, it becomes a very, very difficult situation for the average manufacturer.
If you had the chance to meet the president or the finance minister as the executive director of the Manufacturers Association, what would you tell them about this current situation, or what advice would you offer to them?
I think the first advice is that this cannot be treated as normal. We are way out of normal. And we had a chat with a few people from the Ministry of Finance last week. And one of the things we pushed to them was to say, look, you did something very interesting post-COVID. When COVID happened, you actually went back and reviewed budgets and realigned expenditure in the realization that, you know what, perhaps the projections that had been based upon had been affected. And we told them, look, this is the time to have that very discussion again. Yes, we are thankful of the fact that no new taxes have been introduced in the forthcoming budget, but we are pushing a bit further to say, even for the existent taxes, this is a time to talk about rationalization of some of them. This is also a time to speak about what can be done around government expenditure. I have a running joke with my colleagues in government to say, you see, in private sector, when we have challenges on expenditure, when we see challenges ahead, we belt tighten, we cut costs. When government has challenges ahead, they seek a supplementary budget. We don't have that luxury, and I think they also need to move to a mindset of saying, look, the solution is not a supplementary budget, which is funded anyway by the taxpayer, but rather, how do we cut expenditure as much as possible? How do we rationalize our agencies and ministries? How do we ensure that we are better able to survive this situation going forward?
Okay, as the Manufacturers Association, how do you see, or where do you see the economy going by December if this problem continues, to fester, if it is not handled properly?
I think the challenge ahead is that if we do not find solutions that are sustainable for manufacturing to thrive, we're going to have job losses. That's a given. We've already seen some cuts in some factories, stepping back to say, look, we had projected that we would grow this year, and so we were hiring, we were getting new hires in, but we're now putting that on pause because we cannot for sure say where we will be 2 months, 3 months from now. The second bit is that that we are in an area where we're talking about the DRC as a potential market, but that requires significant investment. We require investment to get into these markets. The challenge is that in the absence of certainty, a lot of people are now pulling back to say, okay, perhaps we wait and see what happens before we invest. The impact there is that the first move opportunity that we could have had is going to be taken by our neighbors who are probably in a better place to do this. The third, I think we'll see, is that there's the potential for a lot of defaults because certainly URA has its targets, and once the target is set, It's not going to be about, oh, there's a pandemic, so we need to slow down on collection. We need to give businesses room to breathe. Theirs will be to collect. The impact of that is that we're going to have a lot of litigation, a lot of people going into court with URA on recovery of some of these monies. If we do not help them beforehand to actually align their businesses and to prepare them for the possibility that they may not be able to pay some of the things that they've taken up.
All right, in your parting shot, is there what you could leave for the manufacturers or those people in the business community in a message like of hope in regard to the current situation that we are having?
I think my message is that each business must take a critical look at its operations. We were under the mistaken belief that we were out of the woods as far as negative scenarios are concerned. But the situation we're in now shows that perhaps we need to take a step back and reevaluate. Fortunately, several of our members have already started looking at their risk mitigation measures. And I think my appeal to all manufacturers is take a look at your risk metrics. Where are you likely to be hit most? Is it logistics? Is it cost of inputs? Is it access to these inputs? How are you planning for the fact that that our corridor to the coast, which is Kenya, is going into an election shortly? Or how are you getting ready for that? Because businesses have to think outside the box, unfortunately, for much longer than we had anticipated.
All right. Yes. Thank you so much, Mr. BIRUNGI Daniel there, who happens to be the Executive Director of the Uganda Manufacturing Association, getting to share and appreciate the problem of the high fuel prices on the manufacturers and, of course, the business community at large. We'll take a short break and return with NTV Weekend Edition.